at Barclays. Tim, good to have you here. I guess first off, what do you expect out of the product launches, and then how much is this going to move the needle? I mean, one of the storylines with Apple has been how the upgrade cycle's been kind of elongated and smoothed out over time. So what do you expect from this this generation?
Sure. Thanks for having me. I would say in general, we're looking at this cycle that we'll hear about tomorrow more as the traditional S cycle. So we think there'll be some iterations around design, the usual battery, camera, processor, things like that should get better. I think a lot of the discussion will come around two things. One is pricing. We do think, particularly in the Pro models, given some of the new technology in there and inflation, that we will see some increased pricing. And the second will be availability. We picked up, number one, some weakening demand, but number two, some supply chain issues. So we do think availability might be a little bit of an issue that people might read into as far as how demand is going for this new cycle.
And what do you think the price sensitivity really is for, I guess, the higher end phones? Are they pushing the limits? Do they feel like, installment plans mean that people will just get the new one when it's out there?
Yeah, look, I think Apple has proven a lot of industry folks wrong over the years by showing that they have really strong elasticity. I think the ASPs on average are up 4 to 5% per year for the last decade. That's normally didn't happen in the handset smartphone world. So they are proving the power of the ecosystem. However, what that does is, particularly in a rough macro environment, on the fringes, it does impact demand. So I think it's for the core base of Apple fans out there that like to get the new products, they'll pay up for it. But when it comes to competing for that mid-tier of the market, maybe with some higher-end Android phones that might be cheaper, it's a little bit more challenging. So I think over time, we do think that somewhat limits the addressable market if they keep moving up market. But in reality, it's worked for them. They've been able to push forward pricing. This might be a little bit more dramatic, again, given the macro backdrop that we're in right now.
Yeah, I guess that'll be the test. I mean, the stock has performed, even with this pullback it's had, pretty severe, little sharp pullback. It's up almost 40% this year, and that's without really any consensus expectations of earnings growth for the current fiscal year. It's unclear exactly how fast they'll go next year, even with services and things like advertising doing well. So how do you view the stock as it's positioned here with all of that?
Yes, it's a little puzzling. I mean, we're expecting to see December down revenues year over year for the fourth quarter in a row. Our model only goes back 20 years, and that hasn't happened in the last 20 years. So we're in uncharted territory here from a performance standpoint. We're hearing, picking up a little bit more caution. If you look at what's going on in China, there's been some competitive phone launches. And we've just seen a lower sell-through. So we think demand is a little bit of an issue right now. So we're on the sidelines here. We're showing a little bit more downside than upside. Also, we did talk about this Google Apple TAC case that's going live tomorrow as well, Department of Justice. So we do still see some real risk to some of those line items in the service business, which obviously gets Apple a really beefy multiple that it enjoys today.
Right. Yeah. So you refer to this case where, of course, Google pays Apple a large sum annually to be the default search provider on iPhone. So how do you think that plays into this thesis here? Do you think there's genuine risk of that revenue stream going away or being diminished?
Yeah, I think there is. It's very difficult to forecast what's going to happen in a case like this. There have been two places in Europe and in India on Android, not on iOS, where the government has said it's not allowed to have a TAC that's traffic acquisition costs. So you're not allowed to pay to be the default browser. So we have seen some governments make moves on this. It's a high stakes game. We think it's $20 billion of revenues to Apple. It's pretty much all profits. So it's about 10% of their revenues. Of course, that is a cost item for Google. There's a lot of moving parts here. Ultimately, maybe Apple wants to do their own advertising and monetizing search themselves. So that might be something in the future that they vertically integrate into. But for now, this partnership is a meaningful one for both parties, and any risk to it is a material hit or at least risk to Apple service numbers.
Yeah, even for Apple, $20 billion is a lot of money in a given year.
Yeah.
Tim, thanks very much. Appreciate the time.